Welcome to the Monic Money IQ, where we work to improve your money IQ. This analysis is conducted based on deep market research.
Glad to be here for this one.
Yeah, so I want you to imagine for a second that you're standing in the middle of this, like, massive, half-finished housing development.
Okay, I'm picturing it.
You see all the wooden frames, the concrete foundations, but there's no drywall yet, no finishing touches, and definitely no color on the walls.
Right.
And it's just completely quiet. That silence. That is essentially the sound of a stalling macroeconomy.
Yeah, that's a really stark way to put it.
Right. And, for a business whose entire existence basically relies on putting that final colorful coat on those walls, that silence is a major existential threat.
Absolutely.
So today we are doing a deep dive into Buxly Paints Limited. They trade on the Pakistan Stock Exchange under the ticker BUXL.
BUXL.
Right. Exactly. And our mission today is to just explore this absolute financial roller coaster of a legacy company. We want to understand how, massive macroeconomic forces directly dictate whether a corporation survives or totally sinks.
It really is a perfect case study in resilience and, well, vulnerability, honestly.
Yeah.
Because we aren't talking about some flashy asset-light tech startup here. Buxley has incredibly deep roots.
Oh, for sure.
They were originally incorporated as a private limited company way back in 1954, and then they eventually made the transition to a public limited company in 1985.
So they've been around a long time.
Exactly. And their bread and butter is manufacturing pigments, paints, varnishes, protected surface coatings, all of that.
Right, the stuff that literally colors our world.
Yeah. And while their primary battleground is the local domestic market, they do actually have an export footprint reaching into the Far East and Middle East, too.
Okay, so they're established, but as we start looking at their operations, there's this specific structural detail that really jumps out.
The toll manufacturing agreement.
Yes. The toll manufacturing agreement with Burger Paints Limited. And for those of you listening who are really trying to build out your money IQ, understanding this mechanism is crucial.
It dictates everything else we're going to talk about today.
Right. So can you break down the mechanics here? What is toll manufacturing? And why would a legacy business choose to do this? I mean, I know looking at financial reports can be as fun as watching paint dry, haha, but I promise this story gets wild.
It really does. So toll manufacturing is it's a highly specific form of outsourced production.
Okay.
Let's say you've spent decades perfecting this amazing recipe for an artisanal cake, and you own the brand name that everyone trusts.
Sounds delicious, yeah.
Right. But building and staffing a massive commercial bakery takes an immense amount of capital. It's expensive.
Totally.
So instead of tying up your cash in ovens and real estate, you go to another master baker who already has a massive facility. You give them your recipe, and you pay them a toll.
A toll, like a fee.
Exactly, a fee to use their equipment and their labor to make your cake.
Okay, let's unpack this. So Buxley owns the brand, they own the formulation of the paint, but they are essentially just renting Burger Paint's factory floor to mix the chemicals.
Precisely. They're utilizing Burger Paint's infrastructure.
Wow.
Now, the advantage is it shifts your cost structure.
Yeah.
Right? You avoid heavy machinery depreciation.
Right, you're asset light.
Exactly. But the vulnerability, and this is the central theme of Buxley's whole story, is that you are entirely reliant on a third party. If the cost of running that factory goes up, your toll charges go up.
So you lose control over your own costs.
Yes, you lose a huge degree of control over your cost of goods sold.
Which brings us to the boardroom. Because before we get into the wild financial swings, we have to establish who is actually calling the shots here.
Ownership dictates strategy.
Always. Always. And looking at their shareholding structure as of June 2025, the plot thickens a lot.
The equity distribution paints a very specific picture. What's fascinating here is...
Well, wait, out of the 1.44 million shares, right, across 863 shareholders, you'd think it's democratic.
You'd assume a widespread, yeah.
But it's not. A massive 56.64% is held by, quote-unquote, associated companies.
Right.
I mean, sure, the local public holds about 27.85%, foreign public has 10.38%, mutual funds have a tiny 3.28% slice. But when associated entities hold well over half the power, it's just a family-controlled boardroom. They're driving the bus.
They absolutely are. And what's fascinating here is how that concentrated ownership bleeds into their daily operations.
Oh, so?
Because that primary associated entity we're talking about, it's Burger Paints Pakistan Limited.
Wait, seriously?
Yes. Let's connect the dots. Burger is the majority shareholder of Buxley, And Berger is also the entity manufacturing Buxly's paint through that toll agreement.
Wait. So the landlord, the manufacturer, and the majority owner are literally all the same entity.
All the same. And the entanglement goes even deeper. Berger actually pays Buxly rent for using certain land and buildings, and there are royalty streams flowing back and forth.
That is
Yeah.
insane.
It's a highly complex, incredibly symbiotic relationship. Every time Buxly sells paint, Berger probably charged them to make it, while also paying them rent for the ground the factory sits on.
Wow. Okay, so knowing who is at the wheel, let's look at how they navigated the stormy economic waters starting in around 2019.
A very rough year.
Yeah, a period defined by cutthroat competition. But real quick, as we get into the numbers, can you define top line and bottom line for the listeners trying to improve their money IQ?
Sure. It's pretty straightforward. Top line is simply your total sales or revenue. It's the top line of the income statement.
Okay, got it.
And the bottom line is your final net profit or loss after all expenses and taxes are paid. The literal bottom line.
Perfect. So let's look at their 2019 crisis. The numbers are brutal. Their top line dropped 18.34% down to 256.67 million rupees.
Which is a massive hit to volume.
Huge. And gross margins fell to 12.1%, which resulted in a net loss, a bottom line loss of 15.70 million rupees.
It was a full-blown crisis, but they did attempt to come back.
Right.
In 2020, they implemented really rigorous cost controls. They revised their prices, and they managed to squeeze out a tiny net profit of 0.05 million rupees.
Basically breaking even.
Basically, yeah.
But here's where I want to push back, or at least ask you to clarify something. Because in 2021 and 2022, their top line grew massively.
It did. Sales shot up.
Yeah, like 28.83% growth and then an explosive 45.66% growth in 2022. They are pushing way more product.
Right.
But the paradox is their gross profit margins actually shrank during this time, down to 13.7% in 2022. How can a company sell roughly 45% more paint but see their gross margin shrink?
It feels like it defies business logic, right?
Totally.
But this is where the invisible mechanics of inflation really bite a manufacturing business, especially one using toll manufacturing.
Okay, so the costs were just rising too fast.
Exactly. The cost of raw materials, the pigments, the toll manufacturing fees, they were accelerating at an unprecedented rate. This inflationary pressure completely outpaced the small price increases they were sneaking into the market.
Because if they raised prices too much, people would just buy a cheaper brand.
Exactly. They prioritized volume over margin. But despite that margin squeeze, their net profit actually grew to 4.21 million rupees by 2022.
Wait, how did the net profit grow if the margins shrank?
Because of the finance team. They used the cash from all those sales to aggressively slash their short-term borrowing. They cut their finance costs significantly.
Wow, so they basically just paid down their credit cards.
Exactly, they deleveraged.
Okay, so this tension between selling more but struggling with costs leads us to what I'd call their absolute zenith, the 2024 peak.
Their banner year.
Yeah, they hit a record net profit of 7 million rupees. That is a staggering 157.75% growth.
It was a triumph of price optimization and maintaining volume.
But to fully appreciate 2024, we actually have to look at 2023, right? Because they took a massive hit to their administrative expenses, a spike of over 80%.
Right, due to ECL.
Yes, ECL. Can you explain ECL for the listeners?
Yeah, ECL stands for expected credit loss. It's an accounting standard. Basically, you have to look at the money your customers owe you, and if the economy is bad, you have to estimate the probability that they won't pay you.
Oh, wow.
And then you record that expected future loss as an expense today.
So you're taking a hit to your profits right now for money you just think you might not collect.
Exactly. It forces you to be realistic.
So they cleared the decks in 2023, had an amazing 2024, but then we hit the 2025 crash.
The reversal was dramatic.
Yeah, in 2025, their top line slid 5.75%, and they plunged back into a net loss of 4.059 million rupees.
The primary driver, according to the reports, was, quote, retarded construction activities.
Basically, the housing market completely froze.
Right. Inflation and interest rates broke the developers. If people aren't building, they aren't painting.
But here's where it gets really interesting. When sales drop, you expect expenses to drop, right?
Usually, yes.
But their administrative expenses jumped 62.44% in 2025. And sure, partly due to minimum wage hikes, but the sources explicitly cite workforce enhancement.
Yes, the employee headcount.
They grew from 24 employees to 26 employees. Ha ha! I mean, adding literally 2 people to a corporate payroll is being cited as a major driver of surging admin costs.
Uh-huh. It really puts their scale into perspective, doesn't it?
Yeah.
They are running an incredibly lean operation, moving hundreds of millions of rupees in product with just 26 people in the back office.
Which means they have zero buffer.
None. There was no one left to lay off without breaking the company.
So Buxley hit a wall in 2025. And that leads us to the current reality, the first half of fiscal year 26. Are they painting over the cracks, or is the foundation still crumbling?
It's definitely crumbling. It's a deeper hole. In just the first half of FY26, they posted a massive net loss of 12.548 million rupees.
In just 6 months.
Yes. Sales dropped again, and admin expenses surged another 49.70%.
Good grief. But wait, there is a silver lining in the data. Finance costs actually slid by 77.35%.
That is the one positive, yes.
And it mentions monetary easing and the discount rate. Can you just briefly explain those?
Sure. The discount rate is the foundational interest rate set by the central bank. It's the wholesale price of money.
Okay.
Monetary easing is when the central bank lowers that rate to make borrowing cheaper, hoping to stimulate the economy.
Got it. So interest rates went down. Plus, as we mentioned earlier, Buxley had already fully settled their short-term loans, so zero debt plus lower rates equals basically no finance costs.
Exactly.
But wait, if they have no debt burden, how are they still losing so much money?
Well, if we connect this to the bigger picture, it reveals the structural issue. Even with zero debt, they are losing money because of high raw material prices and those increased toll manufacturing charges. Renting Burger's factory floor is just unsustainably expensive when your sales volume is low.
So just waiting for the economy to rebound isn't enough?
No, the future outlook is clear. They have to tap into new geographical markets or entirely new product lines to survive. They can't just wait.
Wow, what a ride. Well, that brings us to the end of the numbers today.
Yeah, but I want to leave you with a final thought to mull over.
Go for it.
The paint industry is often considered a leading indicator for the broader economy. If people aren't buying paint, they aren't building, and they aren't renovating. So, what does Buxley's massive struggle to find buyers tell you about the actual health of the broader economic recovery?
That is a fascinating point. If the paint isn't flowing, the economy probably isn't growing.
Exactly.
Well, we want to hear from you. Suggest topics or companies on which you want to see research-based content.
We always love diving into the ones you suggest.
Definitely. Press the bell icon to follow for future updates and like and subscribe our channel.
Like and subscribe.